Good morning, traders. Today is Monday, the 15th of November. My name is Neville Hornsey, market analyst for YouTrading, and today I am joined by
Joel Frank, also market analyst for YouTrading.
How are you doing, Joel?
I'm good, mate. How are you doing?
Yeah, good. Had a nice sort of outdoorsy weekend, so enjoyed that. What about yourself?
Good. Yeah, good. Finally, after a couple of weeks of mayhem in my flat where they were tearing apart the kitchen and the bathroom, that's all done. Yeah, hopefully it's stress-free now.
You're doing well. You are winning. All right, so
hopefully.
Who's going to be winning in the markets this week?
Who's going to be winning? Well, imagine this. Imagine if more of the Fed members are sounding worried about inflation than like a week ago. That could support the dollar. Imagine if the data is strong as well, that could continue to build the case for like a hawkish Fed shift. Because it's just like, I think everybody is just questioning the credibility of the Fed now. In wake of last week's CPI data, 6.2%, highest since 1990. Like, how can they still be so dovish? They've got to shift hawkish. Like, I don't know. What do you think about that?
Like was it the University of Michigan sentiment expectations on inflation where people just expect the inflation, but also that they don't believe that the Fed's got any sort of tools to combat, or they're not going to implement the tools, or they just don't know, have any ideas. So there is a worry now. Also, that sort of got escalated up to the White House. So, the White House needs to be seen to be combating inflation. Otherwise, they're not going to get re-elected come the midterms. And I think the Fed are probably going to follow the market rather than the market follow the Fed, as they always do.
Mate, that's really, really good point and really true about the fact that this time's a little bit different, isn't it? Yeah. Because there's political pressure building on the Fed. Obviously, the Fed are supposed to remain neutral and independent from politics, but there's all these renominations coming up, isn't there? There's is it going to be Powell getting renominated because his term expires in February, I think, isn't it? Yeah. Or is it going to be Brainard? And the thing is, the narrative about that has shifted in the last couple of weeks because of all this inflation concerns. Before, people were thinking the White House would prefer Brainard because she'll be dovish. She'll keep rates lower for them and help boost the economy into the next election and blah, 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 and help get unemployment down and prioritize growth and unemployment over inflation. But now, like you say, there's all the political pressure. Everybody's worrying about inflation now. They're probably going to prefer someone who's a bit more hawkish.
Yeah. And I think the market probably prefers to know what they're getting. So they know kind of what Jerome Powell is all about now. So there's that certainty, so that can be priced in. Uncertainty would be like a new Fed chair and new policy. So I mean, there is a lot of FOMC members speaking this week, and we've got CPI data from Canada and the pound on Wednesday. So
inflation remains the big theme. From the FOMC speakers, how do they react to the recent inflation? For the ECB speakers, particularly like the core, like Lagarde and Lane and some of the other more important members, do they stick to their guns, like calling inflation transitory, staying really dovish? Probably will. And with the RBA, they're probably going to stay dovish as well, talking about how they think Australia is like insulated to an extent from inflation and that they're looking at wage growth. And also that's another important thing for Australia and the Aussie. We've got wage growth data, which is probably going to be quite subdued, which is going to sort of endorse the RBA's dovishness. So that I would imagine is probably going to be a negative for the Aussie, because you already highlighted the consumer sentiment data from the University of Michigan last Friday, which was like, man, consumers just basically panicking about inflation. Like, they're so worried in the US. And to be honest, like, it's worrying here as well, isn't it? Yeah. Like, we just had energy go up 12%.
No, you say 12%, but my electricity bill is going up by double. It's just like, okay.
Really?
Yeah. They said, like, based on the amount of electricity that you're using, I mean, I've got a light on, I've got all this stuff going on. It's going up by double. It's just like, well, yeah, I get that when gas prices are going through the roof, like as in like natural gas prices that power the electric stations and stuff that you have to deliver. But natural gas is coming down now. And I bet if all of this is transitory and like energy prices do come down and blah, 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 my bill's not going to come down.
Oh, no,
like,
no.
They're still going to charge me more this year and next year than they did the year before. So it's like,
yeah, that's the funny thing about the whole transitory thing. Like, it's a bit, unless you're really into like the whole economic side, you might get, if you're just a member of the general public that doesn't follow this stuff as closely, you might think that it means, prices are just going to go up, but then they'll come back down. But it's not about that. It's like prices will go up 6% this year. They're never coming back down, but then next year they'll just go up 2%. Personally, I'm all for nuclear because nuclear is very reliable, very cheap, but obviously it's got a bad rap, hasn't it? So,
Bill Gates is trying to sort that out with his new firm. He's doing mini nuclear reactors, and like France just announced that they're going to go more nuclear, so they're going to start doing that.
Well, France have got, I think, like the highest percentage of their energy is nuclear anyway in Europe. So yeah. I mean, that's what I think we need to do.
The government haven't spent enough money on the research and development of better renewables. Other countries are doing it. So we'll have to import their technology in and pay other countries for all their hard work. So it's bad for the UK if we don't embrace something that we are good at.
I think another theme we need to watch in Europe as well, lockdowns. We're seeing lockdowns in Netherlands.
It's spreading from the east, isn't it?
It is. Yeah, because it was bad in Russia and it's kind of come across, hasn't it?
Yeah, and as anecdotal evidence, like my wife and some of my kids got COVID. I didn't. So,
how do you escape that?
One of the kids and me just swerved it. It's definitely there. I believe.
How are they? Are they better now?
Yeah, totally fine.
You seen anything in the charts you want to chat about?
Yeah, so US dollar broke out from its range, got above that $94.50. Looks like it's going towards 96 on a weekly chart. I'm just looking at these sort of levels. So to get a thing here. So from March 2020, that big low, $95.50 to $96, I reckon, is where we get to.
Like, obviously, you never know what's going to happen. But if the Fed is going to become more hawkish, if they are going to bring forward their monetary policy tightening, and do all of this way before the ECB, way before the BOJ, like euro dollar and dollar yen make up the biggest portion of the Dixie.
Yeah.
So if that's bullish for the dollar versus those two currencies, then really you should continue to see the Dixie going higher, I would suspect.
Dollar yen, as we've talked about it, I keep drawing all these patterns saying it's going to be this one or it's going to be this one. It looks like it's the second sort of bull flag. So we just need a continuation out of this with some volume. Obviously, rising rates has been pushing the dollar yen higher. Energy prices has been crushing the yen because of manufacturing and consumer sentiment. So yeah, that'd be good. Dollar CAD. I did have all of these sort of lows as resistance and it sort of held, but then last week that breakout in the dollar absolutely smashed through any sort of semblance of resistance. So running out of dollar CAD resistance.
Yeah. I mean, one of the things is though that we've got some data this week out of Canada, and if it is, so the BOC is probably going to be even more hawkish than the Fed. You would imagine they're going to be like one step ahead of them. So that should probably offer the CAD some shelter. Although obviously, as always, dollar CAD's very vulnerable to what happens with oil and energy prices. So Brent, keep an eye on that.
Brent, on a weekly sort of chart, I've still got in some sort of bull flaggy type of continuation to the upside trade.
Yeah.
But the dailies starting to look less convincing. If we take out this swing low around $79, then we could probably come back a lot lower. So
yeah, I mean, like we've already spoken a little bit about lockdowns in Europe, which isn't a great look. Like when the coronavirus situation worsens in key markets, that is potentially a theme for Q4. Like if we start to see higher cases in the US and potentially some more restrictions there, like what we're already seeing in Europe, that could sort of weigh on crude oil prices a bit in the medium term. I mean, obviously also we got this potential response from the Biden administration to the higher prices. Are they going to release crude oil reserves or whatnot? So just a few things to be cautious about.
I read a report on that and they said, releasing some of the SPR would be, short-term good, there'd be like more flow, but they'd be better off doing banning exports, so all the energy was like kept within the sort of North America. There's a tight market in oil and
a deficit. You could say a supply deficit.
Yeah. So and one of the banks worked it out to be around 1.2 million barrels.
Yeah.
So TLT, fixed income, that's been really helping or hindering, depending on how you look at it, the NASDAQ and things like that. The auctions last week, the 10-year notes and then the 30-year bond auctions, the market in the NASDAQ especially, almost silent, like it was just chopping through a little channel. And then as soon as those auctions had finished, the reaction was obviously for yields to go higher and the notes or bonds to drop. And that's when the NASDAQ moves. So I've been watching these like a hawk. Gold, obviously everyone's been talking about gold. Breaking out of that craziness as it did. Got above the $1,830 and now we're all the way up towards 1870. So that's good.
It's just crazy because like financial conditions in the US are so stimulative, despite the fact that inflation's so high, despite the fact that the economy has been recovering well. So obviously that's a great environment for gold because that all kind of smacks of a big dovish policy mistake, doesn't it?
Yeah,
being
definitely.
way too dovish. But then, obviously if the Fed does realize the error of its ways and then go like snap more hawkish and push real yields higher as a result, then I would think gold would be vulnerable for a bit of a setback.
Yeah, because it has no real yield, not in the sort of inflation terms, but there's no actual yield to gold, is there? It's just
exactly.
But there's a store of wealth, the sort of purchasing parity type stuff. People need to feel like that they're not losing money with all this inflation. A weekly chart on the S&P 500 just is even last week closed green according to this chart. So that's amazing.
Yeah, I mean, for now, here's a thing to consider for equities. Like, equities obviously are priced nominally. So long as higher inflation, so long as they're able to pass those costs on and keep up with the higher inflation in terms of their earnings, higher inflation is actually a positive for equities.
Yeah, definitely looks that way. Anything else you want to look at?
Don't think so, to be honest, mate. I think we've covered everything.
Cool. All right. Well, I'm not going to be trading heavily this week. I hope you have a good week, though.
Yeah. Cheers, mate. You as well.
And I'll speak to you next Monday.
Yes, speak next Monday. Bye, mate.